Bitcoin is back, and this time it's totally legit. Welcome back to the Best of a U.S. Investors Weekly Review, where we go over Friday's Platinum Channel swing trading call and the Carries Zoom call that is taking place every Friday for a whole long time. Well, this week we're going to focus on really a big subject that has been in the narrative of every news channel recently, but also is gaining legitimacy in the asset investment world, and that is crypto, in particular Bitcoin. We talked a whole lot about it in this Friday's calls, and so we're going to hit upon certain parts of it that are informative, bring knowledge to it, and make, well, owning Bitcoin a little bit more easier to understand and why you would. Recently, with the approval of ETFs, 11 of them being approved to actually buy Bitcoin and sell them to the public, Bitcoin has become a legitimate asset class. And this has spurred on the value of increase of Bitcoin. In this next segment, Mark breaks down what has happened with this approval, what other countries are banging into this asset class, and why Bitcoin is here to stay and headed north.
That kind of sparked a little interest this week in the Discord was we talked a little bit about cryptocurrency and Bitcoin and inflation. And so I'm just going to talk a little bit about Bitcoin and crypto, and as a hedge against inflation, and what's happening out there and why we're seeing this bounce in crypto now, and especially Bitcoin. So, like, for inflation, let's take Argentina for a second. If you guys could put your microphones
These are
on
the
mute.
popular coins that dealers will buy. Everyone,
You guys could put your computers on mute until you want to talk, and then put them off. Or not. Okay. So, in response to Argentina's staggering inflation rate of 276%, citizens of Argentina are increasingly turning to Bitcoin as a safeguard against economic instability, making a notable shift in financial strategy. The surge in Bitcoin purchases comes amidst a decline in the traditional practice of exchanging pesos for dollars, which historically served as the hedge against inflation in Argentina. Traditionally, exchanging pesos for dollars was a common practice for Argentines looking to hedge against economic volatility. However, this approach has diminished in popularity in recent months, coinciding with the strengthening parallel exchange rate against the dollar by 10%. Conversely, Bitcoin has witnessed nearly a 60% surge against the greenback during the same period, attracting investors seeking alternate avenues for wealth preservation. The surge in Bitcoin purchases in Argentina amidst soaring inflation underscores a significant shift in financial strategy as citizens increasingly turn to digital assets as a means of wealth preservation. And you saw that in Nigeria, and you're seeing it around the world. You saw El Salvador now offers as a legal currency in El Salvador Bitcoin, and they have Bitcoin in their coffers now as a nation. The reason people turn to Bitcoin in times of inflation is the U.S. dollar has been deflated because of the continuing printing of our money, which devalues our dollar and makes the dollar less valuable. So, in terms of inflation, which is the other way around, if for every dollar that you had prior to the 17% increase in cost to you as a consumer, 17 cents now is eaten up by inflation. So you have 17 cents less each week, basically, to buy goods and services. So the dollar used to be solid, and it still is. It's the world's currency. However, with us continuing to print money, and that's through treasury bills and our continuing debt and deficits out there, people are looking for something that's more stable and really can fight against inflation, has no inflationary pressures. And so they look at Bitcoin. Bitcoin can only have 21 million Bitcoin ever, okay? 7.8 million Bitcoin have been estimated to be lost. and only 1.3 million Bitcoin are left to be mined over the next 150 years. There's a process in Bitcoin that is called halving. I was hoping Trent would be on here because Trent actually does mining of Bitcoin, and it's pretty fascinating. But when you have every 4 years, the production of Bitcoin is per day is sealed, and so we're at 6.5 Bitcoin per miner per day, and that's going to go sometime in April to 3.12, and then that's going to half in 4 years in 2028 to half of 3.12, and then it's going to be under a Bitcoin in 2032. So there is no inflation in Bitcoin because there is no printing of extra Bitcoin. Once you get to that level, it's done. Okay, so you're not going to print anything more. So with it's supply and demand, the supply is stuck at 21 million minus whatever is lost, 7.8 million, and demand is going up because on the other side, the SEC, 40 some days ago approved the ability for companies to do spot Bitcoin ETFs. Spot Bitcoin ETFs can go buy Bitcoin on the open market, put it in their coffers, and you as a holder of the ETF can buy a section of that ETF. You don't actually own the Bitcoin in an ETF. You just ride the price up and down based on the value of the ETF and how much is in there. So basically these companies, especially BlackRock and Fidelity, you can see ARK is doing a little bit of it. There's 5 or 6 main Bitcoin ETFs that are out there. They're fighting to buy these Bitcoin up and put them in their ETFs when there's only 1.3 million available out there, and then the halving is coming up, meaning there's going to be less and less supply for these companies to buy Bitcoin. So the more demand there is, the less supply there is, and the fact that they're going into this halving process is what the Bitcoin enthusiasts are saying it's going to cause Bitcoin price to rise. And they'll go back over the last 3 halvings that they had, and they'll show you the charts and say, here's where the halving was. We kind of went sideways, and then we see Bitcoin just take off for the summer. We just came out of what they call a crypto winter, which was like their bear case, and now they're saying we're going into the bull case. So you're going to see a lot more talk about Bitcoin. It's speculative, and it's very volatile. So if you ever get into Bitcoin, you're definitely going to be in for the races because it's up and down and all around. But it's something that I actually own. I bought it back, before the pandemic and all that. And I just plan on keeping it what I have. And I bought it in Coinbase. So with Coinbase, I can pull it out, put it into a cold storage wallet, put it in my pocket, take it with me. So it's not out there exposed to the internet.
In this next segment, Mark breaks down Bitcoin and on the charts. Are we at a point where we're going to see another breakout? Let's see what he has to say.
So here's just a swing chart of Bitcoin. You can see it's now under the 9. It's been under 9, 1, 2, 3, 4, 5, 6. And look at that. Look at what a resistance level that 9 has been on Bitcoin. And 20 used to be, and now it's gone down, and now it's the lower Bollinger Band. So some people may say, okay, I'm going to put in an order for $100 at the lower Bollinger Band and see if it hits. This may continue to go down, and we get a death cross, of the 20, which is what we're looking like we're going to get. Come down, the MACD's down. You can see the stochastics down. RSI just went under 50. So, you pop in over here, right there, you ride it up, you come back, you get out. And so Bitcoin, even if it's $100, or whatever it is, because you don't have to buy it for 68,000. You can buy it for $500. You can buy it for $1 if you want, on Bitcoin. So, interesting. Let's go back and take a look at the year.
You can buy fractional of anything.
Yeah.
You could buy fractional of, anything you could buy fractional shares of.
I think that depends on your brokerage, but for sure in Bitcoin, you can do it, $1 at a time if you want. And you can see this is really, popped up. This is back from October, just like the stock market. And I see that Bitcoin for me, and the reason utilizes the 20 a lot more than the 9 as a base that I've seen. You can see here it's dropped below the 20 now. So we'll see what happens if it gets below, and the Bollinger, and we start seeing the Bollinger go down. But you look at the MACD, that don't look good. You see the histogram. You look at the stochastic. We're seeing a little bit of a turn on stochastic. So we'll see what happens. Maybe that's a sign that's going to bounce off this Bollinger. Who knows? But again, as a swing trader, you'd be out of this right now, and you'd just be waiting for for it to come and meet your trading plan again. At least on my trading plan, I'd be out.
Every week, Mark goes over the watch list and the new additions. One of the new things in the watch list is the charts of interest that he features on our Discord. He goes over that in this next segment.
So the paper trade portfolio just basically trades between lines, okay? And not that anyone gets into any of this. I mean, like Berkshire, I'll get into, but these are all from, in the blue here, are all from the charts of interest, okay? So I just put them on, where the buy price was. If it's yellow, I waited for a better price. But on all these, like market stalling, this was just the price that when I put it on the watch list. And again, it's not a buy price, it's just when listed. And even at that point, you can see for a majority of them, it's done pretty well. And when you have an up market, you're going to have that. This week, we have 2 out of 8 that are down right now, okay? So we're at 75%, and we're up 1291 on these so far on a paper trade with 100 shares each, okay, is what it is. We got out of Berkshire, okay? It went up and hit an upper Bollinger Band and sold out for 1266 a share. This is from last week. Advanced Auto Parts hit R2, okay, resistance level 2 at 84.11. That was probably where sells were. 834 per share, $834 on 100 shares. And we got out of Johnson Controls, which was a nice one. It hit R2 resistance at the upper resistance level, got us out at 89 cents or $89. So this is purely, Paul, trading between the lines. On this one, it's just the stocks I see, put them on, and let's just trade it between the lines and see what happens, and that's what we do. Let's go look at some of these real quick. Okay.
JCI was a good trade.
Yeah. And still is. So here's JCI. I mean, this was just, technically you're right here. You could have got in below the 200, if you want. If you waited for the 200, you would have rode this from 58.27 and you'd still be in it, okay? I think I pop out sometimes when it hit the upper Bollinger Band, but you still have, this is where the sell limits are, and you'll see this come up. This isn't such a hard line in the sand, but this green line, the upper resistance level, is a hard line in the sand. But this is the slow train to China that we talk, or slow boat to China we talk about. These are really nice. And then another one that we're still in on the paper trade portfolio is another slow boat to China is ADM right now. ADM crossed over the 20. That's a golden cross. Crossed over the 50, another golden cross. You see, this is where it went on the paper trade. Still following the Bollinger Band. What I'm seeing now is the Bollinger's kind of wilting over a little bit. I'm seeing a little bit of a bow down on the MACD. So always set your stops, either trailing or a specific limit above your cost basis, so you never lose money on this trade. Here's your support. The 9 just crossed your cost basis. If you wanted to put it around there to say, protect your gains. But right now, like an ADM, we're still pretty much in it. We look at the SPY. Let's just go back to the indices. The SPY again, I'll do the 6 months. Oops. Pull this over a little bit so we can see.
On the ADM, a flag comes out because I see it's under the 200, so I'm extra careful with those.
Yeah, you got to watch those.
Extra. Yeah.
You got to watch those a little more careful. Yep. But the reason I use them now is because the 200 is a great resistance level, So if it keeps going, 200 probably is where I get out on a lot of this stuff. And then I watch it to see if it pops over and gives us a back test of the 200, then it can keep running. You
The
know,
risk reward is better.
it is. Yep.
Yeah,
Yep.
it's just, but
Yep.
yeah, it's a risk.
So here's SPY, and you can see we've been on an upward roll, for a while. And then when you go back and you look at, from a bigger distance, you can see we're in this upward moving wedge. Okay, we came down and we just followed the line a couple of days on the lower level line of lower lows, and now you can see we popped right back in to that wedge. Okay, now a rising wedge is normally a bearish pattern. Okay, once it falls out, you normally see, and it hasn't really fallen out yet, you normally see it will drop down. Okay, we're still above the 200, but again, look how tight this wedge is getting, and it's still right there in the middle. Okay, the 20 has gone down below the lower level line, but it's still following the upper Bollinger Band. We'll see. Same thing on let's go look at the Dow Jones. Still kind of a wedge, except this one fell down out of it a bit. Okay. But it stayed right on the 20 and came back within the wedge. So again, we're still tight. We're not seeing higher highs for sure. So until it breaks over, we're still kind of watching to see if this is going to break down or not. We did have a better slow stochastic, and we had a little crossover positively on the MACD. So that's a good sign. We're right back in the wedge. And then we'll go to the Qs. And again, this was just at my estimation of where it could fall, basically. And you can see with the Qs, we had this wedge. We haven't gotten back in it yet. We're still below the wedge. We're following along the 20. And we're just going to see, you can see the Bollinger Bands are contracting. So we might see some sideways, and it's in a consolidation phase. It's deciding which way it's going to go, but it's underneath this wedge. So most technicians would say we have a good chance of seeing it go down. We're above the Bollinger right now. However, the stochastic is looking good. We're seeing a little bit of a crossover on the MACD just on the Qs. So look at NVIDIA.
That's from October.
Yeah. Yep.
Mm-hmm.
And here's NVIDIA. You can see NVIDIA was following its upper line. It bounced out a little bit, came back in, started an upward wedge here, still hasn't gotten back into that wedge. But we're seeing that it's above the 20. And we've seen a little bit of a comeback on the MACD and a little bit on the stochastic a little bit, but we're still not there yet on the MACD. So a lot of these high flying stocks, and we're seeing new highs and things, but we're not breaking past the higher high trend level yet. Until we do that, I'm still a little skeptical about what we're seeing.
On Kerry's Friday call, we talked about supply and demand and how Bitcoin is going to be heavily affected by the lack of supply and the major demand that has rapidly increased with this new approval of 11 ETFs. I break down what this looks like and where Bitcoin could be headed in this next segment.
Yeah, go ahead.
So one thing to understand also is that of that 19 million Bitcoin that has been mined, it is estimated that 75% of it has never been sold. It was bought, acquired, and never sold. 6 million coin, I believe, has been officially lost. So
7.8, they say now.
7.8 million coin has been lost.
Yep.
So now you're dealing with the whole supply and demand aspect. The supply just went like this, and it's guesstimated that the United States government is one of the bigger holders of Bitcoin. So if you want to pay off your debt, that may be an avenue to do so. So what in what Mark was talking about was all of a sudden you've legitimized this commodity asset into a legitimate asset, and now Fidelity and all the big boys are creating an asset that you can buy that has to buy Bitcoin. All of a sudden now they're just buying roughly, let's just say 25% of the available on the market. So as they start to introduce these into 401k plans, which it's heavily talked about, you're going to see more and more of this asset, more demand of it, and yet different from a US dollar, there's only going to be so many. And so this is where that exponential growth and move could really be pretty big over the next 5-10 years from what I see.
Hey, Trent,
And go ahead.
did you see the CNBC video of the guy from BlackRock, how he was explaining how even your shares traded are going to be on the blockchain. It's just a matter of time.
Is it Larry
Yeah.
Fink, is it? Who runs
Larry
that?
Fink.
Larry Fink, yeah.
Yeah.
He explained that. Look, Google it. It's an amazing video on the foresight of where it's all going.
Yeah.
So these are the early stages. And his stock, the IBIT, I've seen charts where that stock now or that ETF is at $38. I own some. $38, I think, or $36. They're talking about that going to 500 and change within the next 5 years.
Yeah. I mean, it's not a question of does it fulfill a purpose, like for instance, Applied Digital or I don't know, NVIDIA. This is a mathematical
Right.
equation. It's a technology that Jamie Dimon has come out and said they are using blockchain technology at JP Morgan Chase. Companies have, American Express, the big holder of or user of Ripple. They're using this technology. So it's legitimate technology. It's now become a legitimate asset class. But here's the thing, and we talked about this a little bit, the call on the Platinum call that I was on, was that with this attention and the narratives that we're seeing on the big news channels like CNBC, this thing is going to move very violently. And so the Ethereums and the Ripples and the other coins that are out there are also experiencing these massive volatility moves. And I think this is where when you start buying this stuff, you're not 100% all in with your assets. This is where this is still a commodity, and you probably shouldn't have any more than 10% of your overall assets in a commodity, in commodities in general. So if you own some gold, you own some silver, you own some nickel, maybe you own some uranium or something like that,
Oil.
Bitcoin falls into that. And so be careful, because like we saw back in 22, Bitcoin was at 60 and then it was at 15 and people got smoked. So be careful of how you allocate to it.
In conclusion, Bitcoin is here to stay. It is now a legitimate asset that you can buy in your retail account, along with potentially in the near future in your 401k. The question is, how much demand will be put on this limited supply of Bitcoin? And then what is the future for Ethereum, Polkadot, and many of these other cryptocurrencies? And will we see them become ETF available as well? Only time will tell, but right now there is exponential potential growth in Bitcoin because of the approval by the SEC, but also because of the demand and the attention that is being paid. So is this a part of your portfolio? Well, join Best of US Investors Platinum channel, where we get into this every day, where we talk about crypto, we talk about swing trading, and we talk about the future of AI. Join us. We have a 50% discount for 3 months. Hit the link, go down to the link below and use the coupon code and join us. And we'll see you next time on the Friday Platinum call, and along with Carrie's Friday call as well. Peace, live loud.